Hello everyone and a very warm welcome to today's cryptocurrencies update for Friday, December 16. This week we checked if the bears still had their walls against the back, and they had, but within 2 days they pretty much took the bulls behind the shed and beat them up quite hard. So we now have key overlap for some levels that had to hold for me to really identify a clean, clear impulse and not a potential impulse path. So now the primary expectation has shifted to this alternative scenario where we have topped for fourth wave, for example, for Ethereum, and some irregular second or P waves or C waves for other cryptocurrencies. So we're back to square one, that the dominant trend is lower. But of course, we are going to wrap up these final fourth and fifth waves. It is always a matter once you get so close to a low, is it already in, or are we going to see one more sequence lower? So bear with me, literally, because as always, when the evidence changes, we change accordingly. We have therefore key levels to watch, breakout and breakdown levels. And if we get overlap with certain levels, for example, a fourth wave low is not allowed to overlap with a first wave top in a impulse, only in a diagonal. And if we see that happen, then we know it's not going to be 5 waves anymore. That's why we label everything as 1A, 2B, 3C, question mark 4, question mark 5, because the market has to prove itself if it wants to do a 4 and a 5. We don't know beforehand. People that slap on labels like that should not be trusted. Similarly to people that post a lot of stuff on Twitter, and then when it doesn't go their way, all of a sudden they have excuses and go somewhere else and get back to it. And I say, see, I got it right. That's not how we do it. You get it wrong, you stick with it, you say, I'm sorry. That was not my preferred expectation, but that is how things go. We are indeed in a crypto winter. So let's have a look at the charts, see if I can find them with my new setup here. And let's start with Cardano. The primary expectation was for further upside if we would break above about 32.5 cents. That was the orange line. We didn't, so it looks like we're now in the subdividing wave 5. Again, this is a ending diagonal. It's quite obviously how this diagonal is forming. So eventually we'll complete wave C of 5 of 5. Okay, and we get a massive bounce. For now, the bears are still in charge, and we've broken above the key 29 cents level. That was key. So now we can go to about 25 cents. Okay, so the trend line here is of course support. We have massive amounts of positive divergence on all technical indicators, but positive divergence is not a trigger, it is a signal. That's all we got, and price has to respond to it. What is positive divergence? It means in this case price goes lower and lower, whereas the technical indicators go higher and higher. You can have quite the opposite in a bull market where price goes higher and higher on lower readings of the technical indicators, which is called negative divergence, but that can last a while. Similarly, in a bear market, it's just turning the chart upside down. So looks like we are in the subdividing wave 5. Again, also this pattern since the November 8 high can just be wave A, then we get a wave B and another wave C. That is the unfortunate nature of diagonals. They can always tag on another ABC. So that's why we have these price levels to watch. We need to now break above 44 cents. If we get above 44 cents, I think we have a very good sign that we are starting to move lower. Ultimately, still need to break all the way back above 68.5 cents to be sure that this is not a ending diagonal but a leading diagonal. Okay, so ways to go. For now, pressures to the downside. Avalanche. Avalanche as well. Looks like we have potentially completed this wave 4 already. Not as clean and clear as I would like to. Can always subdivide a little bit higher, but you can see the price section here is overlapping and messy. It doesn't look like 5 waves. Also, that is part of a diagonal structure. So I still think we're in this diagonal. I still think we are moving lower, predominantly and not higher. As you can see here, 14.5 cents was strong resistance. That was prior support, as you can see here in June, as you can see here in October. We gyrated around it early November, and then we pretty much lost that level. So we need to get back above that level to start to suggest that we have a low in place, okay? So I'm going to move the first warning for the bears now to that level, and the second warning to about this level, and then we can do a third warning here, right? That will be really the proverbial shot across the bow as we then start to move higher. Ultimately, we really need to see price move above the August high at about $31. So we're ways to go. But hopefully, before we get there, we already see a nice 5-wave impulse. It's clean, clear, crisp, no second guessing as we have been doing for the other ones. I don't like those, but it is what it is. Binance Coin, we had two alternatives, a 1-2 setup in place or a ending diagonal, and this seems to match the other cryptocurrencies quite nicely as well. So this is now my primary path that we are in this C wave. We haven't technically broken lower just yet, but we're just on the cusp. Then we get the wave D. Okay, so we've broken below all these all these warnings. Excuse me, wrong button. Warnings for the bulls, and that needs to be respected. So then we should see a wave D and then eventually a wave E, something like this. Okay, you can also call this a 1. I'm fine with it. 2, since it's overlapping. I sometimes prefer the letter labeling. I want to reserve the number labeling for non-overlapping waves. Okay, so again, diagonals can be really messy. And there we go. They'll retest probably for this wave 4, the 236 level, and then ultimately go down to the 150s. That should then be a much nicer path, in my humble opinion. So that's the preferred path. Look at how oversold the RSI is. You can see it here as well. You can see it here as well. It always leads to more downside. We need to start seeing positive divergences. All right, on to the big boy. The big boy here is Bitcoin. Bitcoin was supposed to hold the 16,995 level. It did not. Now Bitcoin has broken below 18,800. It went as low as 1675. So this is still, in my own opinion, just an ABC higher. 1, 2, 3. I have a hard time counting it as 5. We did reach the ideal wave 5 target zone here, which is always between the 176 and 200% extension of wave 1. That would really mean I will have to revert some wave counts, something like this. Then this is 3, then this is 4, and then this is then supposedly a 3, but 3 is then the shortest wave count. That's not so nice. So then we have to go to something like this. This would work maybe. No, it doesn't, because then this low here overlaps with the wave 1 high here. So you see we're starting to struggle with trying to fill in 5 waves, right? So the original count had it, of course, this, and then question mark 4. And if you say, well, we've reached the ideal wave 5 target zone, the 176.4 to 200% extension, can we try to squeeze in 5 waves up? And then we say, well, okay, maybe then this was wave 3, and maybe then this was wave 4. But we know the rule 4 and 1 can't overlap, and they do it here anyway. So that already puts things a little bit under pressure. You go, that doesn't look too great. Okay, we'll keep this as is. Then this is 3, right? This is the 5. So to say there, yeah, no, don't like it. So we go back to square 1 and say, okay, no, we only have 3 waves up in that case. 1, 2, and then 3, and no 4, and no 5. That's why we labeled it as question mark 4, question mark 5. Yesterday, all the reasons in the world to rally higher, and it didn't. So where does that leave us? Intermediate term, looks like we have A, a B, and now we're going to go for the C wave. And then the B wave was, in this case, a flat, an A up, a B down, and a C up. Let me put that in the right color for you. That should, of course, be gray because it's minute. This is then gray B, is also minute. We had a nice 3 waves lower. There, A. Okay, something like this, A. And on the daily chart, you can see I can count it as 5 waves up, which is fine. That is B, and then this is, of course, C. 1, 2, 3, 4, 5. Potato, potato. Ultimately, what it means is we either have a 4 or B wave, and then we're going to go lower here for C to about 12,500. again, the bulls really need to push it above 18,560, right? They gave a first warning. We got a nice first warning for the 1-2-1-2 setup that we originally had. Let's see if I can find it, not this one, if I can find it here, this one, right? We got the warning. It's not a wave 4 because we got overlap with 18,185. Excellent, so we take that one off the table, okay? This is the method of elimination, logical deduction, like Sherlock Holmes. And we are then left with this option. Again, a break below November low is not needed to tell us that we're going to go to about, in my humble opinion, 12,000 for a nice symmetry relationship. And again, if we start breaking above 18,560, that is a serious first warning for the bears. And if we ultimately break above 21,475, I am fully on board with the bull camp. Okay, so dotted line is still tentative, and of course the solid line is that we are full on in the bull run or in the bear run. Okay, so please keep it in mind. Dotted line, a little uncertain. Solid line, very certain. So we're still kind of nowhere land, but this looks good in A and B and C for potentially wave A, then wave B, and then we're going to get wave C of something. So unfortunately, we're still in this downtrend. So as long as we're in this downtrend it is. We need to break above all those key levels. Ethereum, same deal. Ethereum had to hold above 12,015. We didn't. So also here, 3 waves higher. Matches a little bit better with the Fibonacci extensions, where a C wave is often 138.2 to about 161.8. So this is, in my humble opinion, allowed to clear A, B, C higher. So that brings us then to this path, an A, a B, and a C, okay? And we should then have wave 4 complete, wave 5. Again, the daily chart suggests, okay, it could be a 5-wave impulse. The hourly chart, I have a hard time catching it. Then maybe this was 3, maybe this was 4, and it's 5. It's fine. What it is that it looks like we're going to go lower to 965 plus or minus 65. So let me put that in that for this chart. So we had a nice breakout, but the breakout completely failed. We never went above the 50, not on a closing basis. Did we get a closing basis? Yeah, we got 1 day on a closing basis. That's about it. 1310, that's what it is. Okay, 1310 had to be broken. That's all we got. This is why continue to say this market, you have to be a sniper. You have to make sure your shots are accurate from a long perspective. Fast, quick, pull the trigger, no hesitation. Get the profits when you have them. Why? No, because there's still about 30-40% upside from the lows. That's for sure. There's plenty of upside to be had, but you have to be quick. This is not a market you can just sit and walk away from. Okay, this is a market that needs to be pampered and taken care of. So where does that lead us? Again, below the lows here, and we have, of course, full confirmation for this wave 5. Currently a bit in no man's land, and I have to, of course, see price break above the recent highs here to start to suggest that something else is going on. That's the next level. So for now, it's really not inappropriate to sit on your hands and wait it out. Having been stopped out, taking your profits, all that stuff. My crypto trading alert, algorithm trading got stopped out, I think, yesterday already for a little long position, just a quarter position. Let's say normally you put 10,000 on the table. My algorithm then tells you to only add 2,500. That's it. And then it's very tiny. Low risk. Why? Because we're below the 50-day and the 200-day. No need to be a hero. Really treat every rally as a counter trend rally, not to treat it otherwise. So this is still then now the preferred path for this wave 4, and then wave 5 to 965 plus or minus 35. That'd be sweet. It would be picture perfect. Okay, we got that one. So then we have here Link. Link was trying to break above key levels a couple of weeks ago, failed miserably. Question still is, was this the ending diagonal, or did we see a leading diagonal from the high made early November? A 1, a 2, and we're now 3, 4, and 5. Starts to look more like that. Okay. Also here again, we need to see a sustained break above the moving averages and the cloud, and we didn't get it. Nothing wrong with saying, okay, we're above the 200-day moving average, I'm going long. That also means that if it's below the 200-day moving average, you exit your position. That way you have tiny losses. So here, for example, you would go long, and then you would go sell it here. Okay, what does it do? Bigger picture-wise, it really prevents large, massive drawdowns. We can look at the tiny little losses, but you pretty much would have exited here, and then maybe you short a link if you can. If not, you just stay in cash, and you prevent this whole downtrend from about $25 down to $8. That's the power of it. Remember, the power is to prevent drawdowns, because a 10% drawdown requires an 11% gain to get back to break even. A 30% drawdown requires, or a 50% drawdown requires already a 100% gain to go back to break even. A 90% drawdown requires, I think, 1,000% gain. So the longer you sit through your drawdowns, the worse they get. That's why we have stops, okay? In the meantime, you can always trade around it. I always say the best diversification is different time frames. Diversification is not putting stuff in bonds and US dollars and oil and all that stuff. Some things rally, some don't, but when a real bear market happens, everything gets sold because we're in a risk-off environment. And every asset is then considered risky. Cash is king in a bear market. And remember, a bear market is designed to destroy wealth, nothing else. So any long position and profiting from a bear market is counter trend. It is swimming against the tide. You are moving against the modus operandum of the market. I don't care if it's a bear market in cryptos, bonds, stocks, gold, silver, all of them are meant to destroy the wealth that's been built up over time, to reset the clock. Don't ask me why. I don't care about the why. That's what it does. Okay, and that's why we have he or she who leases the least amount of money comes out the winner. That's what we say. That's why, and please print it and put it above your bed and computer screen. It gives you the right mindset in what to expect. Okay, so break even is then the best or the least to expect, and profits should be really the last to expect. You can still profit. There's plenty of upsides to be had, but you got to be precise and snipery, right? As I said, okay, you got to make sure that you're bringing your A++ game. In a bull market, you bring out your shotgun and boom, and you hit the target. Now you need to have laser focus and be fast, A++ game. Otherwise, you will stand to lose your money because you're then floating with the tide of the market, which is to destroy. And trading against the tide of the market is as hard as it is already to profit from it. But we can profit from longs and shorts. And if you can short, then of course a bear market is a wonderful place to be. But always remember, set the right expectations. So if the expectation is, oh, I know in a bear market he or she loses the least amount of money is the winner, well, I'm break even or actually making a little bit of profit, you're doing better than 9 out of 10 people. Because most people hang on for dear life, hodlers, and will never sell till things are at zero and there's nothing to be sold anymore because you have nothing left. So that's not what we do. We make sure on every time frame we have appropriate stops in place. That's it. Matic, let's see here. We've been tracking 5 waves up. We had loud and clear 5 waves up. But again, as I said before, that doesn't necessarily mean we are in a new bull market. Far from it, because it looks like we had a irregular flat wave 2. And C waves are 5 waves. 9 out of 10 times they're 5 waves. So we then had wave A here in early November, and wave 1, A, B, C up, 5 waves for wave C. And we could now start green wave 3, 4, 5. Again, this path is here. We break below the November lows, then this path gets opened, and we're going to go to about 20 cents. The Fibonacci extensions based on the length of wave 1 really line very nicely up the wave 5 of 3 in green and red, etc. So we have good internal Fibonacci relationships to get us to the bigger picture, the red target zones. So please keep that in mind. It really requires a breakout above 115, I would say, to start to suggest otherwise. All right. So again, 5 waves up is great. So we track the potential. We know the price levels it needs to hold. The invalidation level is right here at orange. Not really there yet, but boy, it starts to look painfully dubious for the bulls. And again, remember where we are in the trend. A pullback when things are above all the moving averages is more bullish than a pullback that is when it's below the moving averages. So always know the market environment you're in. This is a negative market environment. It did improve nicely in November, failed miserably. It happens, but know the environment you're in. If it's a bear environment, trade it accordingly. And then last but not least, Solana. I think Solana failed also to even reach the minimum upside target of around $16 for this wave 4, but starts to look better here for the wave 4. Maybe wave 3 already bottomed here. Then we had A, we had B, and we're working on a more complex wave 4. Fine with me. I still want to see this green wave 5. Again, we have loads of positive divergences on all the technical indicators. But again, we have no trigger. There's nothing. We need to break above 15, right? We didn't, to target 17 to 18. We're not. So we're most likely going to move lower. And the Elliott Wave count also suggests that we need at least another wave lower. But I think once we get it, then we're starting to look much, much better for a phenomenal bull market run. So almost there, not just yet. And that's all I have for today. Thank you so much for listening. Take care, trade safe, and see you all on Monday. Bye.